The Bitcoin death cross. It's about to happen. Should you be worried? Well, it's probably not what you think. And in today's video, I want to break down a little bit the situation around the death cross, as well as talk about some of the inflation data that we're seeing, as well as what all these negative real rates, because that's what's actually happening right now, what negative real rates actually mean historically for markets and what we might be able to infer from that moving forward. My name's Lark. Every day I make videos talking about cryptocurrency investing. So if that's a topic that you appreciate learning about, maybe just stay up to date with, then a quick thumbs up would be super, super awesome. Only takes a quick second out of your day, helps me out massively. So if you appreciate this kind of content, a quick tap on that would be awesome. By the way, if you'd like to earn a safe and simple passive income on your cryptocurrencies, you got yourself an account over on Celsius. It's crazy easy. All you have to do, start your account, deposit your Bitcoin, deposit your Ethereum, what other cryptos you might want to put on there. I've got my Matic on there, for example. And you just sit back and start earning money every single week. You get paid out. You get a little notification on your phone. You just made some money. It feels good. 6.2% on your Bitcoin, 5.35% on your Ethereum. Great rates on a load of altcoins and stablecoins. Use the link down below to start your account, and you will get a $50 Bitcoin bonus. Now let's go ahead and get into the topic here. So let's just get it out of the way. The death cross. Scary. Sounds scary anyway. The old death cross. People, tend to fear the death cross, but does it really matter? Well, did a little bit of investigation for you in Bitcoin's long history. We've only had 8 death crosses. Now, in case you're not familiar, the death cross is usually looked at with simple moving averages, the 50-day and the 200-day. You can see here the dark blue line is the 200-day simple moving average. The light blue line is the 50-day moving average. So when the 50-day, the light blue line, crosses under the 200-day, the dark blue line, that is a death cross. The opposite here is the golden cross when we have the short term crossing over the long term on the upside. Here we of course have it crossing over on the downside. In total, we've had 8 death crosses in Bitcoin's history. Now 4 of those death crosses were indeed deadly. They came before massive, brutal sell-offs. Now, you have to understand, the death cross is a lagging indicator. So it shows that the market is already cooked and has been cooked for some time. So when we got these death crosses that resulted in further sell-offs, the market was already down 50% by that point. However, after the death cross happened, we had a 30% sell-off, a 60%, a 61%, and a 65% sell-off. So yeah, 60% sell-offs were the norm for 3 of the 8 death crosses when they happened, which obviously super, super brutal, not fun at all for the market. Now, on the other hand, we have half of our death crosses, which actually ended up basically marking the bottom of a correction or a sell-off. Now, they either came maybe a couple of days before or a couple of days after the bottom, but approximately they hit the bottom. They were the bottom signal, actually, and they were very short-lived death crosses in terms of the total time the 50-day spends under the 200-day moving average. So here we are again facing another death cross. Flip a coin, man. Is it going to be bearish? Is this the bottom? Is it going to be bullish? History doesn't give us a lot of indication. 50-50, right down the middle, versus either it being the bottom or it being the start of a vicious, vicious sell-off. We shall see, of course, what ends up happening. I, of course, remain generally bullish on the cryptocurrency markets for 2022. I think that this is basically a repeat-like situation of mid-2021. Time, of course, will tell if that opinion is correct or not, but that is where I believe we are at the moment. This is likely marking a bottom, not the beginning of the end. But, you know, you can make your own decisions on where you think that's going to go. Also, this is an interesting one here to back up the bottom, not the end scenario. So you can see these areas here highlighted by these black circles. This is the Bitcoin Entity Adjusted Dormancy Flow. So you can see every time we have had this indicator move into the green box here, as is of course indicated by all these little black circles, has been a bottom point for Bitcoin. You can see here, boom, bottomed out 2012. Boom, bottomed out 2015. Boom, bottomed out 2018. Boom, bottomed out COVID crash. Boom, bottomed out 2021. And here we are again back inside that green box. Now, could it go lower into that box? We're just at the tippity tip of it right now. Yes, of course it could. I guess if we get the death cross being a 60% sell-off, we'll go down here. But more than likely, in my opinion, this is again marking the bottom for us, and we'll actually see a bounce here, and potentially we could range sideways for weeks or even months. But that sell-off that we've seen recently, just under $40,000, that could have been the bottom for a while. Fingers crossed, anyway. That being said, we are still in a downtrend for Bitcoin. This orange line here, very simple. That's our downtrend line. We got to beat it. This is the support area where we bounced out of, almost to the dollar, hitting the level of support we found back in September. Nice little rally coming on here. As I was saying the other day, we could have a relief rally up into this area right here. Previous support now going to act as price resistance for Bitcoin as we come up to meet it. Also, of course, running into that downtrend line right here. Very interesting area of confluence. That would be, I think, an area to watch for a breakout. If we do get a breakout beyond this, that could signal a reversal, a big trend reversal here, breaking us out of this downtrend, getting us ready for the new uptrend. But that is also a very big potential area for rejection. So watch for that to confirm before, of course, making any moves, unless you're playing the long from down here, and then that might be an interesting area to book in some profits while you wait to see what happens on the next end. That being said, people have been buying Bitcoin. Not just me, apparently, but also other people buying Bitcoin. So Bitcoin exchange outflows have seen the biggest daily spike since the big sell-off back in September, right? So when we had the big sell-off back in September, fear levels were high. All the charts were screaming, you know, the things are overly oversold, right? Well, same situation here. We had 30,000 Bitcoin leaving exchanges on January 10th. That's the day when we got just under $40,000 earlier this week. There you go. Every single time, it's the same gosh darn story. Bitcoin, in moments of great fear, is transferred from the impatient to the patient. The long-term believers and the short-term speculators. That's how it always works. Here we go. Short-term speculators have sold. I mean, who the heck was selling their Bitcoin for $39,000, whatever? That's crazy, man. That's crazy, but somebody was doing it. Thank you, of course, for your sacrifice. We all appreciate that. Now, of course, 30,000 Bitcoin left exchanges going into cold wallets in the hands of hodlers. Classic, classic. Now, all of this, of course, in the backdrop of this macro environment that's happening right now. U.S. inflation rose to nearly a 4-decade high of 7% in December. Now, what is interesting is that the projection was 7.1%, so this was actually less severe than the market had been anticipating, which was a good thing. We were talking about this the other day. If it comes in less than expected, that'll be a positive thing for the market in the short term. If it comes in over, that would have been a negative for the market in the short term. The market liked this. This is a little bit under what they were thinking it was going to be. So there you go. There you go. Interesting too, again, just, you know, all these people out there buying Bitcoin as an inflation hedge who think that higher rates of inflation are inherently bearish for Bitcoin. Very odd, but I guess they just worry too much about the macro environment and that the global markets are going to go down, the Fed's going to pop the bubble and all that fun stuff. Fed, man. frickin' Fed. Now here is an interesting one for you as well. Dan Tapiero, he shared some great insights here. I want to share two of them with you. He's saying impossibly attractive, minus 6.8% real yields in the USA. So right now, the interest rates are 0.25% in the USA. Inflation is 7%. So if you have dollars sitting in your bank account, the real yield on those dollars, minus 6.8%. Compare that to, you bring it over to crypto land, getting a rate of 7, 8, 9, 10, 12%. Very, very common in crypto. As he says here, legacy cash cannot be made attractive. No Fed hikes can remedy the difference. And he's absolutely right. Like, what's the best the Fed's going to do this year? They're going to hike interest rates up to 1%. The real yield will still be minus 6% in that situation, assuming the inflation stays at 7%. Because they're only going to hike it up by 0.25% at a time. They said, we are going to do rate hikes. Maybe we get back up to 1% interest rates. That's abysmally low. Stablecoins, on the other hand, going off the charts. As Dan says, a deluge of institutional cash is coming. I'm surprised more of it hasn't shown up yet, to be honest. I know we're at $250 billion in total value locked in DeFi, but there's hundreds of trillions of dollars out there floating around in the markets, ready to come in, chase that yield, buy up that Bitcoin. It's going to happen. Also, this was a very, very interesting one, and this is what I'm going to leave you with today because I found this to be fascinating. Dan said that real interest rates are to remain negative for at least the next 4 to 5 years. So remember, inflation's high, interest rates are super low. So the real interest rate on your cash is in the negative if you're holding US dollars. And look, it's pretty similar situation across the board globally for euros, Australian dollars, whatever your local fiat currency may be. Of course, the US dollar is the reserve currency of the globe, so it's the most important one. That's what we talk about it all the time. He says, in previous such periods, asset returns have been historic. Historic asset returns during times of real interest rates remaining in the negative. He's predicting the next 4 to 5 years for interest rates to remain negative. Think about that. Think about that. We could just be in the midpoint of the bull run of bull runs for the equity markets and for the crypto markets. As he says, cash stays worthless. Digital assets, Bitcoin, will outperform. What he also says is very, very true, is that there's no current buying panic, nor is there any euphoria like in 1999 when the dot-com bubble happened. Of course, that was, you can see here. Now, of course, we're in this situation again. Interest rates are negative. The real interest rates are negative. History, if it proves to be correct, and look, history does not repeat, but gosh, it sure does often rhyme, we could be in for a period of historic returns in the markets. Seems like a good time to own Bitcoin to me, but hey, what do I know? I'm just a dude talking about cryptocurrencies on the internet. Your question for today: what do you think is going to happen with this whole death cross situation? Was that the bottom, or is this the beginning of the end? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.